50, and by this 50, we see that this 50, let me say these 50 guys or these 50 individuals here are buying 50 contracts from the ask. We are calling this the resting liquidity. That's what we are meaning when we are talking about liquidity. 50 guys, or let me say one guy maybe, is providing 50 contracts, 50 kilogram of apples. I'm not sure what US measures, but I'm using European measures, 50 kilogram of apples here, or 50 piece of apples. And there's some excuse me, there's one guy who wants to buy 50 apples, and then he got the 50 apples here. So this is the limit liquidity. And when he buys everything from ask, and the next one comes in, what happens then?
Price moves up.
Yes. Let me just, doesn't matter what numbers we have here, just to make sure what we are talking about. That means 50 apples have been bought at 160. The next one, because the storage is empty, the next who comes in will rise the price to 170 in this case, and then this procedure repeats. We need 19 again to buy everything from this guy, and then we are lifting the price by buying everything from ask. So just I'm doing a little, making a little pause here, a little break, just to get every one of you on board. We have liquidity and we have market volume here. Is that clear so far?
Yes.
Okay. Alexander, Argo, Brigitte, Chris, Christoph, Ed, Frank, Tanner, Jay, Karen, Kiara, Lazar, Levi, yes, Levi, Myron, Phil, Raimo, Robert, Srini, Tom, Yulas, and Alexander. Okay, now that's the principle. I mean, that's really static here, but it doesn't matter. That's the principle. And you will see that this 50 is no, I have to fill this column here. Oh no, that's bad. Why? It's not working. So let me make this green. You will see what I'm talking, because this is green because they are buying 50 and the next one lifts the offer. Going back, yeah.
Someone stepped in and said, okay, I want to live very healthy and I want to buy 70 on whatever price, and it's already gone.
Yeah. So just to make the opposite side, given there's no one who is willing to buy 19, additional 19 at 170. Okay? Then what makes the prices fall? Why do prices fall?
Because someone is willing to take the lower price.
Yeah, but what happens mechanically? Think about an auction. What happens in the book? Or what happens in the market? We have understood why market.
Okay, then X number of contracts are traded at 160.
Yeah. How many exactly?
Just 50. We need more than 50.
Yeah, exactly. Because that's really a theoretical discussion here, but just to give you an idea how this order book and DOM works and how an auction works. It's the same. It's a very simple auction. The very first seminar I did, I don't know, 4 years ago, we did really an auction. So I was the auctioneer, and then the members or participants of the seminar have been the members in the pit, and it was totally funny to watch what happens when you are part of really a pit auction. So, given we understood someone must buy from ask 50 and then lift the price. The next one lifts the price to 170, and in return, in reverse, if we want to, why the prices are fall is, as I don't know who was it. 50 must be sold to this buyers here, to this bidders here on the limit side, and if this 50 is sold, then the same action happens to the downside. So what numbers do we need here? So the next one who is selling makes the prices coming down from 160 to 150. What do we need at 150? How many contracts do we need at 150 to make the price fall?
69.
Yeah. Sorry. 7%. Yeah. What do we need to make the price coming back from 150 to 140? How many?
20.
Sorry?
20?
Yeah. You see, in this case, the price goes back here. To be very precise, when we hit this, that means we need here. So that's the book. So we sold 70 into 150 and we sold 20 here. That means we have to, doesn't matter, the numbers are not important, just to show you the mechanism very short and what we are talking about. And that happens in extremely fast time, in milliseconds. That's really sometimes hard to watch. The only exception are treasuries, from my experience, where you can sit there and seeing what really happens in the book. But the prices rise. Let me just draw this red here. The prices rise because there are willing buyers to buy from ask, and we are talking about lifting the offer, and the prices fall because there are a lot of people who are hitting the bid, who are hitting into the bid. So now we are trading came down from 70-60 into 130-140 here, 130, excuse me. That's the actual traded price. So the market trades in between 130 and 40 here. That's the BBO, so-called best bid offer here, between those both levels here. When we are talking about this mechanism, about liquidity, and liquidity is, by liquidity I mean that's the resting liquidity on the ask and the resting liquidity on bid. We will talk about a little bit later again, and I will stress the liquidity because you will see, maybe even today we will see whether that happens, how the big players are playing with the liquidity, placing liquidity there, canceling liquidity, adding liquidity, and how TradeFinder will show you what's really happened in this market. That's quite interesting to watch. This in between the bid and the ask, this is the market volume. These are so-called aggressors. I'm stressing that because we need this as a common the smallest common denominator. Excuse me, I was watching for this word. This is the smallest, or the smallest common denominator here. We must know what liquidity is, and we must know what market volume is. These are differences. The guys are simply waiting for to be hit or to buy or to sell. It doesn't matter. And these guys, the aggressors, are coming in because they can't wait. They can't wait until the price comes to 130 or 170 or whatever. These are the aggressors. Now, one additional word why the prices comes down or falls is because there is no bid support. The main cause why the prices fall is there are no bids. If the prices deteriorates or we have a crash in the market, then you won't find enough buyers who are willing to stem against this drawdown in this case. That's the reason why prices fall. If we find support here, for example, he is selling, he sells 30, then you will see a refreshing maybe here to 40. Then he needs 10 more. Then you will see a refreshing to 60. Then he needs, again, 20 more, and so on. That's really standardized mechanism. It's valid for every single exchange or for every single instrument, for every single good or whatever. If you are buying kettles or flowers or futures or whatever, it's everything everywhere the same stuff. So that means at 130 we see support. At 130 we see support. Otherwise, we will see a further deterioration of the price, going down, up and down. And very, very briefly, very fast, I want to introduce you to the liquidity and the volume model. Once you understand that, it will help you in your daily trading every single day, because you understand and you have, now I hope you have a visual in your head between the bid and ask and the market volume. So, excuse me?
Walter, if like say 60 hit the bid market and 40 lift the offer at the same time, what happens then to the price?
60 has, That means
at the same time.
Yeah, at the same. What do you mean by the same time?
Yeah, in the very millisecond.
Yeah. They are supporting there. You see the same. You see the same behavior when here someone hits the 20. Let me say 20, and then you will see a refresh of the book, and then suddenly you see 40. So they need to find more buyers. Let me say they see another 20, 40, and you have refresh here of 60 or 70, whatever, and you see this flickering, and the price is going nowhere because they are simply adding to a certain level, resisting at a certain level, and they are supporting at a certain level. But when there is no bid, that's the rule of every market. When you don't find a bidder, the market falls. It doesn't matter where. We have some auction houses. If you are going to an auction house to buy a art picture, whatever, you will have the same. You will have the same behavior. The auction starts with $1,000, and if there is no bid, the prices goes down to 800, and then suddenly someone starts with 800, 810, 810, 820, and then the price goes up. It's the absolute same mechanism. But we must be clear that this is the same mechanism we see in every single market, every day. Why I'm stressing that? Because first of all, the DOM is not a common tool, although it is free. It costs. It comes without any costs, but it gives.
You have to pay. I think you have to pay to use the water dome within some brokerage company.
No. The dome is free. The dome is free for If you are thinking about Jigsaw Trader, then they're trading based on that. But the dome is free in Bookmap. The dome is free as well in I think in Sierra, in any other chart. The dome is there. Simply it's there. So that's what we should keep in mind, because it's so really precious information we can get out of that if we can't follow that, because we are talking about thin instrument like NQ, for example. I will show you that on live chart. Then oh no, let's do that immediately now. Just let's do this discussion right now, because it's important. This is the actual market. This is the actual market, and therefore, and what I'm trying to tell people is, put the dome on your chart. Look around in different trading rooms. You will nothing sees. I don't believe that you will see something like that, because in this market it is, yeah, it's possible to see something what we are talking about. We have the bid, we have the ask here, we have the aggressive volume, we have the I learned that from Jigsaw Trader. We have the quotes delta. The quotes delta, you see how they are adding and subtracting on. I'm measuring only 5 levels here. You see the greens here, these are the buyers from the ask, and you see the reds, these are the sellers into the bids. Please interrupt me if I'm too fast. Please intervene if you want to know something, if you want to discuss, please do so. So, therefore, we decide or distinguish between liquidity and market volume. That's the most, yeah, I know that some of you don't give anything about that because it's maybe not usual, but let me just come back to this one. I insisted when I was trading that I want to know the liquidity, excuse me, Chris, I'm insisting to know what liquidity is and know what market volume is. Because to see what is really happening in the market, ladies and gentlemen, what is really happening in the market. On one point, it gives you the information, okay, the ES E-mini trades at the moment for the first 16 level with 170 contracts in average. That means the first 16 levels from the best bid offer here, where this green or red line is, the first in 16 levels. You can extend it to 20 if you want, or to 10, whatever you want. Excuse me. You will see the average volume of the market. Now let's compare it to the NQ. The same picture. The only difference is I don't have the quotes delta because it's extremely fast, but it doesn't matter. Let's extend it for the NQ, and you see the difference, how thin this market is. Average liquidity 7, 10, based on the first 10 levels. If you see the BBO, the first 10 levels, the market volume is 500. It's the beginning of the session. No, it's not. We are in the main session here. 600. Which is not bad, which is really not bad. But you see the average liquidity, there's nothing. So therefore, that makes the speed. That makes the speed of this market here. Let's have a look at, let me see if Tesla is as well extreme thin. Tesla is as well extreme thin. You see average liquidity of the first 1,000 levels. I mean, the tick in Tesla is 1 cent. That means I'm measuring $10 is 65, 63. Market volume currently is not bad. It's 28,000 at the moment. Let me have another look. Maybe I have here as well the ZB. So the average liquidity is 500. And the
Walter,
excuse me, in the market volume is 800. So again,
sorry, could you measure liquidity with like the spread, so that if there's could you say like if there's less liquidity, the spread will be? Is that a valid statement?
No, it's not. We are not measuring the spread here. We are just giving the information how liquid the market is, because we need this information to set up the trade finder correctly, or to find the best settings for an individual instrument. Because I will refer to that a little bit back. We want to find, in trading, that's what I'm talking about. We want to find these swing highs and swing lows. We want to find and spot swing highs and swing lows. Therefore, we need a liquidity, but we are not measuring the spread. It's not. No, we don't do that. We simply measure the average liquidity of the instrument, and by that, coming to ES, back to the ES, we see the how volatile the market is, the volatility of the market. Because when the volatility is high, you will notice that the average liquidity drops very dramatically. So even here, this average liquidity of ES is nothing, 160. That means we can derive out of this that the market is that the participation in the market is not high. I'm wondering if we maybe see even 1 million traded today. Then we can know and we will learn that this is a direct measure of the market volatility. When the market volatility is high, the liquidity drops, and vice versa. When the market soars of the ES, we saw even 300, 350 here. That means there's a confidence in the market. The market is strong. The market is confident. And this is simply, excuse me, this is simply a small measure. This is simply a small measure about the market. How to judge the market at the very moment when we are in and we see what the market is doing. It doesn't help us at a moment to understand whether we should buy or we should sell. But we have a good understanding of the market liquidity based on the depth of market, based on that what we see in the book here. And when you are missing this information, it's really hard to understand what is liquidity, what is market volume. Although these are two different meanings, and it will give you another. Let me just take this one here. I think maybe trading would be possible with seeing this live view of the liquidity, because if the market if the market volume is strong on ask, it's a little bit too fast. It's a little bit too fast now. If the market volume is strong on ask, what happens?
It will drop, I guess.
No. Okay. I can just make. Do you see my screen? I will put on this. So you should see my Excel spreadsheet on your screens, right?
Yes.
And the live view as well.
Yes.
Okay. It's not the best example, but will come in a few minutes. You see the green aggressive volume here, 50 and 30. That means that's the market volume, and this 30 and 50 refer to the ask here on the market volume, and the bid.
So we should go up.
Just not to confuse.
No, it depends on the it depends on the liquidity. If you have we have 176. So in this situation will go up.
Yeah. I'm just a little bit confused because of the ask bid here. I'm not sure if we have another bug here, but you are right. If this ask if this green gauge here, or this bar, if is stronger than longer, and then the price will go up here. Now the price is going down, I suppose, here, because they are hitting the bid here. They are hitting the bid. 633 into 190. It's a little bit not the best example, but I just wanted to show you that this has a direct impact on the price. So you see bid, they are hitting the bid, they are hitting the bid here. They are just refusing, price comes to a stop here. And it's not usable. You can't trade based on that, because you can't, the aggressors come in, and we can't predict when the aggressors are entering the market. But at the moment here, very nice to see the market should go up, or the price should go up here. They are buying everything from ask. They're buying everything from ask here. They're buying everything from ask. I suppose, yeah, the market is climbing a little bit here. So that's what you see here, just graphically displayed here on the live view. We will come back in the next session or during today. Question to the brief introduction to an auction.
Walter, we might cover the detail, but have you noticed the difference between those two is quite high? You know, one is in 1,000, another is in like hundreds. You know, that 1,000 should consume a lot of.
You mean you are talking about these numbers here?
Yeah. So, see, now you can like it's in 800s. Even the ask is like 400s, but available over there is 175. Is that normal?
Yes.
That way?
Yes.
Because that should consume a lot of those asks with that thing, right? It should consume a.
Yeah, the market volume at 700 whatever 50 or something, 170, it shows that there is simply, I would say there's a movement in the market. It means the market trends. If you see 1,000, if we see 2,000, now we are a little bit too late now, 700, 1,000, 105, 2,000, let's say 2,000, then you will see this, it has a direct impact on the market speed. That means the price, let's example, you see 2,000 here, and you will see that the market goes up very, very fast because 2,000 aggressors, 2,000 participants, 2,000 guys like you and me, entered the market and they want to trade. Let's say they want to trade up into this liquidity here or into this VWAP or into this POC. Then you will see 2,000 very strong power in the market to move the price to a certain level. And sometimes when the market comes down, and then we will talk about volume spikes and sweeps, then when the market relaxes or comes down or calms down in this case, then you might even see maybe 100, 200, 300. And what you will notice then is that the market goes simply sideways. If there are not enough power in the market, aggressors, like here it's not the best one, but like here, so we have 500 and there are on every side, that means on bid and on ask 180 contracts sitting. This 180 contracts must be traded like here. So we have to find 50, we have to find 30, 70 in this case, we have to find 30, and so on, 60 and so on, 40. That's the same principle. But when you see this picture, now you see it 1,000 here, and we have on every side, on the resting limit side, 170. That means the market is, there's some power, there's some energy in the market. They want to trade at those levels. We can't say the market is going up or the market is going down, but we see that there's there's a movement. The market moves. They are fighting right now with this level 83 or whatever it is here, and it's not sure where the market is heading to. But we see there is certainly a fight and something which will move the market. In other words, if you see 2,000, the market will jump up or down, and if you see let me say 200 here, you will notice that the market is going sideways. So nothing happens for minutes. Nothing happens. The practical question now for the trading is, if we see 200 here, for example, and the average liquidity is as well 200, does it make sense to trade then? Because the market is in choppy state, and that makes the market, it makes the market to take a break here. We can't immediately say the market is going up or down based on these numbers, but it gives us an idea how strong the market right now is. It's coming to coming to a sleep here. Maybe, you know, we can predict the liquidity in the market. You see what happens here. We can predict that, but we can't predict the aggressors, when they are coming in, when they will come in, and what they want to trade. If they are in and they were very fast and full of energy, and then we will see that. If we are very concentrated in focus of one market, we will see that. But it's not possible to predict any aggressor at any time. That's not possible. It's impossible. We can only rely on something like, oh, there's liquidity. We will talk about long-term high liquidity, short-term high liquidity in few minutes. And we can say, okay, market needs liquidity. So you are going to sell your whatever you have, your car, maybe to the next town where a market for this car is. You are not sitting in your wherever you live, in city or whatever, and waiting that someone is coming to you and buy your car. So if you want to be proactively and going to sell your car, then you have to go to the market where to the place where a market is, and in this case the market is here. Okay. But just to make sure that we are talking, that we understand this very, very, very basic stuff here. Ladies and gentlemen, I kindly ask you to take your time to go through this order book, because this is a standardized procedure all over the world. There's nothing different. It's everything the same. The auction is everywhere on this planet the same. Any questions so far? Okay. I started. I was with when I ended, and then I was as an institutional trader, and I first came in contact with an order book, a dome. I'm not sure whether it was TT or anything else. They have their Bloomberg terminals. They have the domes, and that's where I first saw this stuff, because when you, at least I'm talking about myself, when you start trading, or when I started trading, then you got a lot of information about trading, and most of, I must say, at least I'm speaking for myself here, is nonsense. And then Peter Davis with Jigsaw Trader started in 2000, I don't know, 9, 10 or something, to make a dome for NinjaTrader 7 this time, and it was affordable because TT was quite expensive for a retail trader like me, and therefore that was the first contact. And Peter Davis did a tremendous job, did a famous job. Peter Davis did a famous job with the Jigsaw Trader, although it is really, I gave up because it is too tiresome for myself watching the dome all the day. Because I'm visual type, so I'm a visual guy, so I need some visualization of the market, what the market is doing. What I just want to show you here is the structure of the limit order book. It can answer all these questions. How much was traded? When was it traded? At which price was it traded? Was the price accepted by the traders? Which side wants to buy? Which side wants to sell? Are they incoming aggressive buyers or sellers? And it shows you whether an instrument you are trading is thin or thick. I think this is quite important, even if you are really, because I have discussions with traders who are seeking discussion with myself is that every one of us here in the room, every one of us is an individual. So maybe some of us are more patient than others. So and that has a direct impact on what you are trading. If you are not patient, maybe you need to trade NQ or CL or other instruments, cryptos maybe. But if you are patient, then the treasuries might be the right way to trade treasuries instead of thin instruments. And maybe you are using option to trade, what is recommended, using options to trade stocks, for example. We have always the same answer. We will try to answer questions we have tried to answer this week is we need to find the sweet spots. I call them sweet spots, where our risk-reward ratio is the best, should be the best. That's what we are seeking for, what we are looking for in this trading. And the structure of the limit order book is standardized. Therefore, you should understand liquidity as the resting liquidity on ask and resting liquidity on ask and resting liquidity on bid. And in between this are aggressors. Please interrupt me if you don't understand, if you can't follow, or maybe I'm too fast, whatever. As mentioned, this is not a monologue, or shouldn't be a monologue at least. I showed you, and that's important, I will go very quickly through this foils here, just for your information. As I showed you, the aggressors are colored green, and the limit of ask or offer is colored red. That means these greens are buying from red. The sellers, the these guys who are sitting on ask, they are asking this price and they're selling to the greens here. And that's the opposite side of the book. The reds here, aggressors, are marked red. They are selling into greens, or into this, into the limit, resting limit orders. These are patient traders, like you and me here, who are waiting until the price comes down. And then if we sitting there at this a certain price, we got to fill. Or we are matched and then we are in the business. So I added quotes delta. I added the quotes delta to my book dome here. By the way, you can get the setup very instantly in a second. I will show you that during the next days, where you can download all these settings for free, and you can apply it really in 5 seconds if you want. So they are selling right now here. Where is the? This is the price is here, 82.50, 82.50, and you see this red. They are selling into bids, and the greens are buying from ask.
Walter, the quotes delta, can you explain what's negatives and positives?
The quotes delta is measures is very simple. It's a very simple mechanism. So when you are using the dome, and maybe you are using, that's because I'm coming from Jigsaw Trader. So adding or subtracting to bid offer. Yeah, that's simply a very, very simple mechanism where the quotes delta shows the current adding. Look here, 100, 190, 100, and so on. It's quite fast. So that means they are on these 5 levels here. I'm just measuring the 5 levels based on best bid offer here. Here. It measures how many contracts are added, or how many contracts are subtracted from these levels here. Just put this up. That means you see that right now here they are currently adding 100 to the bid, and if that goes constantly up, you see always 100, 100, 200, 300, and so on. That means this is a kind of support. That's a kind of support. Yeah, thank you, Chris. That's a kind of support. Otherwise, and there's a wonderful pattern, I love it, I call it the lure. It's a wonderful pattern when the price trades into an area at a certain price, and then they are simply supporting that on bid. You see liquidity on ask and you see liquidity on bid. They are making the buyers, they try to make the buyers buying, because they are trying to support the bid in order to catch or to trap these buyers into a certain price. And then after maybe 30 minutes or whatever, 20, 30 minutes, based on, I'm talking about ES, they are simply canceling everything on the bid and the price drops. And these buyers are caught, their stops are hit, and this, you know, when the stop is hit, then the price accelerates, in this case to the downside. And you can see that when you are watching the quotes delta. So like here, it's a little bit too fast, but it doesn't matter. You see they are subtracting minus 100. That means the bid side is weak. The bid side is weaker than the ask side. And when the bid side is weaker than the ask side, it means there's more pressure to the downside here, maybe into this institutional level or the settlement. Yesterday's close 78 here, where it was, maybe they are going to trade into the gap here, 78. Not immediately, but anyway, you see how they are trying to fight now, right now. Adding 100, subtracting, then the pressure comes on the ask. When they are subtracting, that means they are vulnerable to more upside, or the price will go up. That's the meaning of quotes delta. It's a simple mechanism. This is really nothing. There's simply nothing what we. It's nothing special we need to talk this about. Just to give you an idea what's behind. I don't have that on NQ, because NQ is extremely fast. I don't have this on thin instruments. I'm just watching the ES. ZB as well. Oh yeah, ZB, look here. Nice, good point. Now here, that's the extremely, I recommend to trade soybeans or ZB treasuries, because if you are patient enough, you can get first every fill, and you can make good money with them. So you see what happens here. This is resistance on ask. Sebastian, I'm not sure who asked right now. Eve or Sebastian, whoever asked. I'm sorry for that, guys. Missed that. I just heard a voice. But you see how they're resisted on ask. That means they gave resistance on ask. Now they are trying to support on bid here. That's the current picture. You see how they're adding 352 to 160 and 17. Yeah. And they have trying to lift and to support the bid here. So any questions to quotes delta or to the dome? Do we know exactly how the CME? Yes, there's a web page on the CME who describes, or which describes, there's a page on the CME. Not sure if I can find it immediately. There's a CME wiki, and you I can't find right now the page, the link. Yes, No, we have not only FIFO, we have more than FIFO. We have different entry techniques, but everything is described on the wiki of CME Wiki. So I can't. Yes, we can do that offline. I can't find a link right now, but the most of all this stuff is described on CME Wiki. Okay, let's go very briefly to this stuff. If you have questions, please, I urge you, please cut in and talk with us. Talk with me, talk with us. Don't be shy. There's no need to that you will hold back your questions. Put them in the chat. This is your seminar. This is your time, and I'm spending my time with you to show you what is really important for you to understand the market better and better and better. Limit order, what it is? I think limit order is an order on the limit side.
I have a question.
Yes.
The column in the middle, the SVP, it always confuses me. Is that like it's just the historical market data, the historical trades that have been made, right?
Yes,
Yeah.
that's what's indicated here in the aggressor volume here, aggressor part. The nice thing is that was the you can nicely see if you're watching and setting your dome. It doesn't matter whether you have Jigsaw. It doesn't matter whether you will put a dome on Bookmap. You will see very nicely the statistical outcome. You see here at 92, I'm not sure, 92, very nice resistance here based on this green bars. Let me just here, this green bars, you see that? This is all historical what happened, but this is how a dome works. This is really nothing, at least to me, nothing special. You see the historical data here, but what you can do in Bookmap, and that's one of my secrets here. You can click into this column here, into this aggressor column or SVP column. I renamed that aggressor column, and wow, magically everything is gone. So you can reset it at any time just to see better what happens right now here in this case. One wonderful dynamic iceberg order here. We will talk about that. But you can reset all the time this aggressor column here and get rid of the historical data. The SVP here as well, you can rename that. So to get a better description.
So that column represents anybody who hit market order.
Yeah, these are market orders. Yes, we are hitting the bids, we are lifting the offer. These are market orders, and yeah. Therefore, I would like to encourage you to watch it. It's free. It doesn't cost anything. You don't need to spend any cent for this dome or wherever you are. Maybe if you are with NinjaTrader, you have to buy the license to get a Superdome. If you're with Sierra as well, you have to pay monthly charges, I think, for Sierra to get different.
The one question.
Yes.
When you mentioned NinjaTrader, on not the dome, but the level 2, how they represent it, the way they represent it. I mean, I know. I'm just trying to clarify. Are these prices going off on all these levels because the spread is there, the size is there, the depth is there?
You are talking about Ninja?
Yeah, Ninja, the level 2 quotes. Level. Oh, let me try to see if I can put a picture.
Mm-hmm.
Hang on one second.
Hey, Walter, this is
Yeah,
Frank.
Frank, hi.
Hey, I got a quick question for you. Do you, in the aggressor column, do you double click and clear that out fairly frequently during the day?
No, I don't do that because sometimes like I did it right now here in this column. Sometimes it's quite interesting to watch this bars here. So they are relative to the volume traded, and as I showed you, there was a high volume traded in 92. I think it was 92. So I'm sorry for that. I don't delete them because they can be of value when we are considering and watching the so-called resistance or support areas. These bars are relative to the volume. I think it's the same for Jigsaw as well. So you can do that as well in NinjaTrader. But I don't reset them because simply of the fact sometimes it is necessary or sometimes it is valuable to see to watch the level where the relative seen the biggest, let me say, the biggest bars are. Maybe to see that that was a support, that was a resistance. So I don't do that. Let me see.
Okay.
Let me see the picture whether I can open it.
I was just curious if you do that when you're getting ready to execute a trade, just to see if you're seeing lots of support or
no. I will show. We will discuss other techniques how where to trade, where to put this trades on. Just this is quite interesting if you want to understand the big picture. But when I'm a trade, let's see. My intention was to see this gap, the institutional level, the yesterday close, go long here. So when I'm in a trade, I'm focused on the trade. Where could be the next target and so on. There are a lot of questions during a trade. I'm not watching the aggressor volume here. The only exception is, but on the other side, TradeFinder will show you that, is when we see a sweep and volume spike here, for example, which means exhaustion. And we will talk about the price dynamics here as well.
Okay. That's good. I'm just curious.
Yeah, that's okay.
Thank you.
No problem.
Well, I'll try and put the picture.
Yeah, I'm
on
trying to download this picture. Yeah, that's NinjaTrader. So what was your question again? Hello, Julas? Hello?
Hello?
Yeah.
Hello, dear.
Yeah.
Okay. I'm sorry. This is a picture, but on the live version, like everything is going off at all these levels, right?
Mm-hmm.
Is that the same thing when they take off contracts and put on contracts, or is because there's a spread here also? So I'm a little confused. Where does the price go off at that price level?
Yeah. I'm sorry for that. I'm not using level 2 here in this case because I think you have kinetic or rhythmic data. What data is this?
This is kinetic.
Yeah. The point with kinetic is that they are providing aggregated data. So sorry for that. Aggregated data. I think we should make a break now, just to relax a little bit. Yeah, but it's not the same. You see the spread here. You can use the spread as well if you are accustomed to this picture. Yeah, and then you can use that. But I can't say anything meaningful to this level 2 of a NinjaTrader. So I'm sorry for that.
No problem.
I haven't used this practically in my trading because I'm watching the NinjaTrader Dome. I have here can show you what I have here. Just a moment. Just a moment. This doesn't work. Doesn't work. So I don't know. And it's gone. That's what I have here on Superdome on NinjaTrader. I have Jigsaw, but I didn't start the Jigsaw as well. So it's maybe a very similar picture, but I'm not looking at a spread, just seeing how to say. We will discuss that, and I will show you what I'm looking for. I just want to see the sweet spots here, and then I'm trading, and not looking at a spread right now. In this case, for the ES, maybe the spread is important for other instruments. Not sure about that. But I can't say anything meaningful to this level 2 of NinjaTrader.
No problem.
Okay, guys, so limit order, what it is, I think it's clear. Market order or aggressor, what it is, I think we talked about that as well. I put this in this documentation just for you to go through and to make sure you understand this really important instrument of an order book, because it gives you so much information back. You should miss that. You shouldn't miss that. Cancel an order, what is, yes, and that's quite important when we are coming to liquidity in a few minutes, is canceling an order, what it is. What is it? Oh yeah, that's a typo here. We will constantly see that the orders are cancelled in a book. The problem with it doesn't matter whether you have level 2 ULS or you have a Superdome or you have Jigsaw Trade or whatever dome you have. It is so fast that you can't. Human eye can't see what happens in the book in milliseconds then, and therefore. The visualization, as I mentioned, I'm a visual guy. The visualization of an order book is extremely helpful. It's helpful to see what really happens in the book. When either the bid or ask queue is depleted by market orders and cancellations, the price moves up or down to the next level of the book. This is as well to answer your question. There was a question about the quotes delta. You see the depletion of the book in the quotes delta here in this column here. Hard to see for NQ if you are trading DAX, German DAX. It's impossible, but you see that very nicely for treasuries here. If something is cancelled or added, you can't follow that really easily with the quotes delta column here. So quotes delta, nothing new really. It's called quotes delta. I think Jigsaw is calling it a little bit differently. And don't snap. It's a snapshot column in Jigsaw. You remember this? Maybe we have had a look a few minutes ago, and then I talked about quotes delta, and we saw they are adding 400, 500 constantly around this 16 or 70 level here. Can't remember that anymore. But in this case, it's really worthwhile and meaningful and important to have this quotes delta, because it shows you with this instrument that they are supporting this level. And when a level is supported, be sure maybe that this price will stall or come to